Hello, all. It's Tony here. Well, after a volatile week, we saw US equity markets finish higher on Friday and for the week as tariff threats faded and regional bank earnings eased credit market concerns. Now, looking ahead to this week, attention will focus on US China trade developments, and the Q3 2025 earnings season picks up the speed with earnings set from tech names including Tesla, Netflix, IBM, and Intel. Despite the US government shutdown entering its fourth week and the Fed now in the blackout period before its October FOMC meeting, there will be interest on an inflation update, which is being pushed through by the US government despite that shutdown. Now let's take a look at the charts of the Nasdaq and the S&P 500 to see where they are as we start this new week. All right, just to recap, what we are working with here is the chart of the Nasdaq on the daily timeframes, starting from that April Liberation Day low. And within our Elliott wave theory, we're looking for a 5-wave advance. Now, what you can see here is your wave 1, your wave 2. We've labeled this advance up to this high here in mid-August as wave 3. This is the shallow wave 4 pullback, and we are now seeing a wave 5 advance, which hit a high recently of 25,195. Now, we have a question mark here as to whether the wave 5 or the rally has run its course. And it is possible, but what we need to see is the NASDAQ really start to push below this support area, which would give us further confirmation or increased confidence that we have struck a medium-term high. If the NASDAQ were to break below this support area, let's say 24,200 to 24,000-ish, that would give us a pullback target initially of around 23,000 coming from these lows over here, with scope towards the 200-day moving average currently coming in just below 22,000. Now, let's just say that the NASDAQ weren't to break below this support zone and that, in fact, it continued higher. That is also fine within this wave count. It is an extending wave 5. And while it holds above this support zone, we have to allow it the opportunity to retest this high at 25,195 and potentially push up towards 26,000. Now, for the S&P 500, very similar. We're looking at the advance from the April lows here, this 48.35 low. Here is your wave 1, your wave 2. This is the wave 3 high here coming in at 64.81. And then we've got a corrective wave 4 coming in here, which played out during August. From this low on the very early, the first trading session of September, we're now calling this a wave 5 advance. Now, again, within Elliott wave theory, once a market has completed a 5-wave impulsive advance, we're generally looking for a correction to play out. Now, for us, we've got initial signs that potentially we have topped out at this 67, 64 high in the S&P 500, but we need to see it break below this layer of support coming in around 65.50. If it were to do that, I think you've got the green light for a deeper pullback towards potentially 63.50 support area, potentially back towards these lows here coming in around 6,200. Now, if the S&P were to push higher from here and didn't break below this support zone, then that's fine as well. We would call this an extending wave 5, potentially looking for it to push up towards 6,900. So in summary, we have some very important downside levels to watch in terms of support for both the S&P and the NASDAQ. If they were to break below those support levels, then I think we've got confirmation that we have struck a medium-term high. However, until those downside levels break, you need to allow this advance, the benefit of the doubt, to continue higher. That's all for this week. Stay tuned for more market updates ahead.